Hello everyone. Today is Monday, June 29th. Looking at the E-mini S&P and using the Trade Scalper software to scalp the markets looking for opportunities. I'm going to show you something that happened here this morning with this signal 3028. Before we begin, just remember that trading is risky. Please don't trade with funds you can't afford to lose. Talk to your broker and understand the risks involved with trading. So the signal here on the Trade Scalper
Order
3028
submitted.
is very simple. The software gives you the signal. You, within a reasonable time, place the order and you don't rush into it. I have on the left side the range chart, which doesn't show a signal, and I have on the right side the 1 minute chart, which shows the signals. So the signals are different if you're using different types of charts. So the one thing that is important, regardless of the type of trading that you're doing, is that moving your entries and moving your stops and moving your targets unnecessarily creates a problem because you never know if you're doing the right thing. You don't know if you can get in at a better price. You don't know if you're going to miss out on the trade. You don't know if you're chasing it with a bad fill. So, for any type of trading that you're doing, including the software and the methods that we teach at DayTradeToWin, it's best to look at the signal, place the order, and not move or chase the market, because if you do, you'll wind up with a worse fill, and that is a problem because your target is based on currently about 2.5 points, 2 points, 2.25 points, and you're able to make the target if you got in at the right place. The longer it takes for the order to be filled, and the longer it takes for the order to make a profit, the worse off you are. So as you can see, this particular signal never hit the entry 3028. It missed it by one tick, and I did not move and I did not chase this market with a worse fill. I kept it. Typically, if you wait 3, 4 minutes, if it doesn't happen by that time, and if it really moves away from you as if the move is over, it's made its move, that was the signal, that was the pullback to get in, and you missed it. And if that's the case, don't chase it. So I wanted to show this particular example because a lot of traders who have the Trade Scalper software probably encountered the same thing. And a lot of you, I know, they front run it, they get in front of the signal, and I think that's not the best way to trade. Now, we're looking at the next order that's about to be generated. It is the short signal 3029.75. So this signal 3029.75, again, without chasing the market, this happens to be on the range chart, not on the 1 minute chart.
Order
This is the
submitted.
same idea. Within a few candles, less than 4 or 5 minutes, you want to be filled 3029.75. And I'm not moving this particular entry. I'm going to wait to be filled. If it doesn't happen like the last signal, that's fine. I'm not going to move the order. I also look at the ATR. So you figure easily 2 points can be made on this trade, if not more, maybe 2.25. But I'm going to be conservative. Look at 2 points, 2.25 for a trade like this. I am using a market if touched. So a market if touched entry is based on it touching that particular price. It doesn't have to go through it, and there's no order queue, so you're not waiting in line. The market if touched converts itself into a market order. You have to expect that there may be slippage, maybe slippage in your favor, or maybe you get the exact price. But for all intents and purposes, consider when you do get filled that a market order is going to be generated, which you could get filled at within a tick, especially on the E-mini S&P, which is pretty liquid. So remember, within 4 minutes, 3, 4 minutes, maximum of five, especially if you're scalping, if that was the signal, you want to get in, you want to get out, and you want to move on to the next trade. If the ATR is indicating 2 points or 2.25, then you could expect a good, healthy move of 2.25 points in your favor. So always have a predetermined target when you do get filled based on the current conditions. If the market is fast, you make more money because the distance it moves is faster. The slower the
Order
market,
filled.
the worse off you are. Trying to get larger moves, you have smaller targets and smaller stops. So you can see here that the target is automatically placed for me using the ATM strategy. So the ATM strategy allows a semi-automatic way to place the stop and the target without you manually have to placing them and counting how many ticks on your price ladder or on your dome. There's a few videos that we've put out at DayTradeToWin recently that cover optimizing your computer, that also talk about how you can manage multiple charts on the same screen with different software. If you haven't watched those videos on trading computers, on optimizing your computer for trading, as well as navigating different monitors and so many other things that we offer at DayTradeToWin, please review those videos. I think it'd be helpful for your trading. Now, since I'm filled here, I'm not going to move my stop. If I get stopped out, that's the way it has to go. But the worst thing that you can always do as a trader is move your stop to a larger stop. If the market slows down, if the market becomes more contracted and you're waiting for the target, it's not happening, yes, move your stops to a smaller stop loss, as well as your target. Manage the trade. Don't ever walk away. A lot of traders ask me, can I just walk away from the trade? I think that's a terrible idea. You should look at the market and manage it. Currently, about a minute and a half has passed. So, in reality, we haven't waited that much time for the market to fulfill a target or a stop. Typically, if you're holding on to a trade for 20 minutes or longer, it's too much time, especially with scalping. It should be much, much faster. Something else that I want to discuss is the news events that occur if you are trading during a high priority news event or a release of a report like unemployment report, especially now with the current times that the market has been so volatile. Be careful and stay away from that type of a situation because it's chaotic. We don't want to trade during a chaotic time. We want to trade understanding that the movement is normal. Now,
Target filled.
I'm filled on this target and out of the trade and finished. You can trail a stop if you'd like. I personally prefer to get in and get out and look for the next opportunity. If you have any questions and you'd like to join the July 7th class, the next mentorship class begins on July 7th. Email us at support@daytradetowin.com or just check out the website daytradetowin.com to look at and watch more videos and how-tos and get you set up with a demo account. My name is John Paul. Have a great day. I'll see you in the next video. If you want to learn more about trading, visit daytradetowin.com. Subscribe to the Day Trade to Win YouTube channel, the next mentorship class where we cover all of these methods with lifetime licenses for the software.